But my favorite thing about the TA routine is that it is super simple, it is super effective, and you really can do anything with it. So yeah, right now I could delete all the lines and end up with the same trade plan as before. So if you're someone who doesn't like to have lines on your chart all the time, you know that this is awesome for you. If you're someone who likes to leave lines on your chart forever, this is also good for you. So really, it works out for everybody. But a big thing is getting your range started. As you can see, we did that on the monthly time frame. Again, tons of tiny candlesticks everywhere, so I want to start from my bigger time frames and work my way down. So what we did is we just kind of looked at it on the yearly, see it range trading, go down to the monthly, and again, you don't do this in every chart. We're doing this on Las Vegas Sands because of how much price action is here. But as you can see, just big range trading again, getting our range, go back down to the weekly, and you see price is about right here at the 44.80. So I'm going to go over here to where price initially started, and I'm going to mark up a couple levels around current price. I'm not going to go way over here, and make my chart super clustered. I'm going to mark up levels in which I know are super effective. I'm going to start marking my emerging candles over here on this left side. What is an emerging candle? An emerging candle is a candle with high volume or a candle in which breaks a new area. So, of course, from left to right, you're going to want to mark each of the top of your buyers, and you could do so, and that's the first few steps of your weekly and daily time frame analysis. So going to be a pretty big chunk of what you're doing here. So as you can see, price break into a new area. I need to open this up a little more. And again, as you analyze other sectors, you'd look at this and go, this must be some sort of transportation stock or some sort of, consumer stock. And that is because it looks just like an airline. I mean, you can see it has that kind of ascending look to it and breaking back down. But let's start back over with our TA routine. We're going to mark up more emerging candles. So again, from our left side, candles in which haven't been broken above. So you can see good peak here at 55.60. As you can see, we have a lot of chop to look at. Move over down here. Mark some supports, mark some good areas. Anytime you mark a level, you want it to always be touching at least 2 to 3 different points. Rule of 3 is a solid rule to go by if you're someone who just wants a set rule. So of course you want to find a point in which is touched at least 3 times. And this is really good for trend lines. For price level tools, I like to always look for levels, besides emerging candles, also look for gap ranges. So where are there a few on this chart? There's one here. You can mark both top and bottom of that. You got a few over here, and of course you want to start with your major one. So if you had this one happen here first, and then later on down the line you had another one happen here, which one would you go off of? You should still go off of that initial one if it's larger. Of course you want to go off of your larger parameters. You don't want to have to worry about any insider, or I'm sorry, any inside range trading. Therefore, kind of choppy and it gets a little annoying. But again, marking up your emerging candles. Let's mark up a few other gap ranges I see here. I see that one ends up lining up with that one. And we're getting a ton of levels here. Good levels of support. You can see 1, 2, 3, 4, 5, 6, 7 major touches held as support. So we have a lot of our levels, and then move down to your 30-day, 30-minute. This is almost one of my favorite time frames because it gives you the last month of price action. So it just gives you a good look at something if you've never looked at it before. So let's say I've never seen LVS before. What would I get out of this chart? Well, just instantly I would say, well, for a month we've been cascading down. So no, this isn't overbought, this isn't oversold, this is definitely cascading down, and I can definitely start to look for a slowdown range trade. So where would you assume that could happen at? At any of these levels we marked from our bigger time frame. So of course, as you're day trading, you're going to start to analyze it that way. So just for a day trading plan, what would you set up for a play here? You would set up above 45.50 for calls, below 44 for puts, with targets on each side. You have targets already set. The only thing that you can add on these smaller time frames is going to be your previous day high, low, open, close, and then also your pre-market low and your pre-market high, which, as you can see, we already have better outside parameters marked, so we don't need to actually have these marked on this particular example, but still good to go over it and show you guys exactly what we're looking for here. Above your pre-market high, of course, you're looking for bullish momentum. Below your pre-market low, you're looking for bearish momentum. If you ever find a day within its previous day, you can trade from your pre-market high to your previous day high, or your pre-market low to your previous day low. These are very, very high probability levels and targets once broken. But let's get into another example, and we'll do PTON next since somebody threw that out. But that is just one example of how we utilize the TA routine. I'm going to show you another. And again, all this is how to chart, basically, just summed up in a quick way. So yes, you are marking a bunch of funny levels at first, and you probably don't understand, what you're marking. But the big importance behind this is anytime you have any free time, or you're away from the kids, or your family, or you ever have time, or you're off work, or finish homework, wherever you are in life, please at least take 10 to 20 minutes each of your day and apply this system. Go through your favorite tickers, go through your favorite companies, go through just a watch list that you have, and go through this. And the practice over time, the repetition will help you very, very much so. But again, let's start with step one. Let's mark our range. So of course I'm going to mark a good all-time high resistance and a good level way down here. A good rule of thumb is also for the bottom part of your range is to mark a good level that was a good emerging candle, but also utilized as support within the trend. So you can see price broke out up to 171 up here, came back down to the 80s, ended up holding as support. So this is the range price is currently in. This is the staircase price is currently in. You can see you have one staircase here, one here, one here. You'll have another up here once this is broken again. Actually, you do have one. You have one right here. So again, marking good resistances above that. So have our ranges on the weekly. Let's go down to the daily. Let's just focus on this left side and focus on this. I'm going to only mark emerging candles on this. Then we will look on the right side and see how well they were utilized. Okay, so let's just go from this initial run up from the bottom of our range to the top of our range. So I'm going to zoom into about just right here. And I'm going to just mark emerging candles in which broke higher. So one there, not one there. We got one there. Emerging candle, emerging. Again, just marking tops of bars that are exposed to a new area. Yes, you could mark this if you wanted, very tiny area. You can mark that gap range if you want. Another gap range if you want to mark that. Emerging, 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 and a gap range. Now, but now I'm literally just going to go to the right. I didn't add any levels from the right to make sure they lined up perfectly so I could cheat the system or make it look too good to be true. Let's scroll over to the right now and let's see how it was utilized. So after price hit its all-time high, price is cascaded down, utilizing the levels. Let's see. Price came down, held this 100.90, came back down, held lower 80s, pushed back up, and you can see prices range trading between this 117 and 123. This morning we actually said we're looking below the 118s or above the 123s for PTON. So our analysis from this morning is relining up again, and again, you just saw me break the chart back down from blank back to everything back up here again. So let's go down to the 4-hour, and let's see if we can mark any trend lines. So big thing to note, we did break down here. We did have a good downtrend change down here. Very big resistance. As you can see, price recovered above it, and now we're focused on current trend. Current trend was broken, and we have range traded back, not just to the bottom side here where this big shoulder is, which is good. And again, we covered this with retracements. If you want to watch that in other videos, I'll cover those more. But this is really good. This is really good for buyers. It's what you want to see. You don't want to ever just see a continuous uptrend. You don't always want to just, which is good, but you are going to sometimes have a break in trend. After you have this trend change break, you have to sometimes break that before just continuing up. So end up getting that secondary trend, it ends up helping out your primary trend, which would be an uptrend. So here on PTON, you can see not only did it just fall out of the trend line, it didn't just go to nowhere. It went down to a good past resistance, utilized it as support, ended up pushing up. So now we've broken down from current trend to where we are now. We can see we did have our primary trend line broken, created another, and now we're back on track again. We're pretty much just back to square one. So you don't really need to draw another trend line here if you don't want to, but I at least want you to be aware of what price is at right now. So it has gone through all of that fighting, and it is out of trend now. You're focusing on this right here. You're not worried about all of that. You already have your bigger levels marked. You already have your trends marked. You're focused on current price action now. So now we can go to the 30-day, 30-minute and see if we missed any levels, which I already spotted one. We have one good, resistance turn support. Utilizes support, support, broken under, resistance, broken out again, and is used as support, support. So 118.75, pretty big level for support. I would say once it's under that, you can start shorting it, but always know right here, really this entire range right here, very strong area for supports, which we covered this morning in the pre-market stream just that way. Also, what are we looking for above? So let's say you're not a good pre-market high person. You want to wait for better confirmation. You don't like just above 120, 180. You want to wait for the better level. You're going to be waiting for this previous day high. Well, why wait 50 cents? Just wait for that better, bigger time frame level here at 123.30. So that is going to be your break above level. That is your entire trade plan. So not only did we come up with a good trade plan for above and below, You also broke down what PTON's chart is saying to you. You're not just looking at this for dollar signs. You're looking at it from a reasoning point of view. So hopefully that example was a little more helpful than the previous one. I wanted to give a second example just because Las Vegas Sands did have a ton of price action, and those kind of charts are kind of scary to look at first. But I want to give you that reassurance that you can break it down step by step, and it will give you a very, very confident trade plan you can enjoy afterwards. Whether it's to actually make money or to just review after, it doesn't matter. Either way, it's very important to at least look at the chart and kind of go through it and thoroughly make a trade plan and at least break down what the chart's saying to you. If there's one more example, I'll go through it a lot quicker than that. What was that again? ESTC? Elastic? Oh, you're giving me a challenge. Of course, that's why you gave me it. Alright, so I'm marking my resistance, turn support to get a good bottom range, and a good all-time high resistance to get a good top of my range. Going down to the daily, let's mark, and again, I'm highlighting just from bottom to top of range. I don't want the right side of the chart to mess with me. I don't want to make up levels. I don't want to mark something just because it lines up very well with current price. You don't want to do any of that to you. So again, mark your emerging candles, gap range, emerging candle, emerging candle, emerging candle. Now let's look at the levels and see how they were utilized. So ever since that all-time high, price has cascaded down, found its 100% retracement. When it came back down again, reconfirmed 100% retracement, good bullish engulfing. A lot of the times you get that gap down, but that's, you can't have an engulfing or a piercing line without a gap down, so you kind of have to have that gap down most times. And when you're looking at areas of support, that's exactly a perfect time for bigger people, as you would call whales or algos, to get you out of that trade, and that would be because you are breaking a new low. What a better time to scare people than with a gap down? So of course you always want to look at that gap down level. But big thing to notice here though is just like on that PTON, let's break down the current trend. So what happened here? So you had a very, very sharp sell off and a good downtrend change occurred with a good gap up. So now we're focused on current trend. And again, why I'm marking things like this is just to kind of visualize, whoops, what happened here. I'm not familiar with what ESTC is, so I want to see what happened here. Had a very sharp pickup in buyers. I would say this is scenario one when we come down to the trend change scenarios. The very first scenario is that it just continues up. It did just continue up. You won't get this a lot of the time. This is a very rare scenario for a trend change. Things don't just go straight up right after they break out. A lot of the time you'll see them kind of range trade, make a higher low. This one decided to push up, then make its higher low. It pushed up, finally broke after weeks, as you can see. Broke down, made its retracement to a particular level here at 135. Again, I didn't look at the right side when I marked this chart. Well, let's see what this level is. Let's make it orange so we can see on the left side what level this is. Look at that. An emerging candle from a previous gap up. Right after a gap up, price held, did a higher retracement, ended up pushing up higher. That's really good for bulls. So again, just kind of marking over there and seeing that, yes, your left side is definitely helping out your right side. Where did we just reverse from? Very big level there. So also I did miss a level. Good resistance right there from current trend. So let's go down to the 4 hour. Just make sure if there's any trend lines we can adjust. Looks fine. Don't need to really mess with or add anything new. If you want to, of course, add trend lines to current price action, you can. But just instantly, before even going down the time frame, you can already kind of make your trade plan while still adding on your extra levels you might have missed. As you can see, just on the daily time frame, I think we can all assume this is a good common resistance. Once broken above, can move higher. So it looks like once it's above this 153.50s or even this 152s, you do have a better chance for price to move higher. Okay, price has already done its trend change breakout. It's already done its retest, and it's already tried to move higher off of lowering volume, right? So I would expect a short-term retracement before this bigger move if it doesn't just end up doing this move here, this parabolic move where it does just continue up above its 153s. So that's really the entire trade plan, and we haven't even gotten down to the smaller time frame where we can. So just for day traders, day trade plan sake, where would you set here? Above 150.30s, below 147.20s. Sorry, 147.60s. So that would already be my trade plan based on a chart I've never looked at. And again, you can see I've never charted this before. Mythin just randomly threw it out. I didn't ever look at the right side of the chart, so it is something you can definitely rely on. So please give yourself that confidence through your preparation. Don't think that this confidence just comes out of nowhere because you're profiting or losing in a trade. That confidence comes from the preparation. The trade itself is effortless. So please apply all the energy and preparation into this, the TA routine, breaking down the trade plan for an above, below, no matter what the chart says, no matter if you're bearish or bullish. Because right now, just looking at this chart, I would say I'm short-term retracement bearish, but I'm long-term bullish just based on this stock. I don't know what they do. Again, we're just going off of just bland analysis here, but always plan for both sides. The point is to plan for both sides. Yes, you could be more bearish or more bullish. That's totally okay. Of course, if you're charting Roku, you're going to be more bullish than you are bearish, but you always need to plan for both sides. So I just want to make that very important, and that is why the TA routine is super effective. But I hope you guys enjoyed this, and I'll see you guys on the next one.